You've been very active on social media talking about this. You feel like that right now, well, similar to the president, you think that credit card companies are taking very high interest rates when it comes to consumers. Why do you think that is? Why do you think buy now, pay later is a better option?
Well, it's pretty straightforward. And first of all, you have to remember interchange regulation as well as interest rate caps have been implemented in Europe quite successfully over the last few decades. And I think Trump is wise here and is proposing something that makes a lot of sense. I mean, capitalism is great, but anarchy is not. And some rules are good for society to function slightly better. So I'm very in favor of this. I mean, I've been fighting credit cards for 20 years with Klarna, with buy now, pay later. And I think we've proven that you can offer a credit that is actually 0% interest, fixed installments, makes people borrow less, and also have losses that are 20, 30% below credit card industry standards. So it is very much a doable thing. And this just makes the market more equal so that people aren't luring customers into high debt traps at high interest rates and finding ways to do that makes the market less functional.
So again, you post a lot about this on social media. One of the things you said is capitalism is great, but not anarchy. I want to go to some of the other numbers that you're citing. You say a credit card transaction here in the U.S. cost about 5%, and you have much better underwriting. So for the typical buy now, pay later purchase, not people that pay on time and have zero interest, but the typical one. I can't imagine everybody pays on time. What are the transaction costs?
Well, exactly. I mean, the thing is, like, you can either construct a product, like credit cards basically work like this, right? You are incentivized to put all of your spending on a credit card, your full monthly spending. You then are incentivized to revolve, which is a confusing concept, and then hopefully build up a balance of, $4,000 or $5,000 charging 30% interest rate. So you're really trying to people to borrow as much as possible at as high cost as possible. And then you're surprised that you have high losses, specifically with people who have lower income or lower FICO scores. Our product is very different. We encourage you to borrow much less. The average outstanding balance being $100, there's interest being zero. We only live of the merchant interchange, the 2.5% that comes from that. And we actually are willing to give up the 2.5% that usually banks earn from revolvers. And in return for that, we get, and then we underwrite in real time. So we don't give you a limit that is pre-decided on income data that is a year old. We do it in real time on your current behavioral data. And then basically as a consequence of that, or obviously because we're not pushing debt and trying to people to put everything on credit, they borrow less at lower cost, hence they default less, 30% lower than in credit card interest rates, which allows you to actually borrow to more people, generally speaking.
But Sebastian, we haven't gotten to the numbers. You say the credit card transactions are 5%. What are you generally at?
You mean in revenue? We are about 2.5% in revenue. So we're about half the revenue that you see compared to the credit card industry.
Okay. What do you say to people that are very critical of buy now, pay later? I talked to a lot of people after the holiday season. We had a data that came out that buy now, pay later hit $20 billion over the holiday season. And these are often people, at least critics say, that just can't afford to make these purchases, but they're doing it thinking that, okay, I don't have to pay interest. But then when it comes time to pay the bill, they end up paying that interest.
So the banks are doing a lot to drive that agenda and that story because it serves their purpose. Again, as I said, like you have one product that says put all your spending on credit at 30% interest rate, build as big balance as you can, and then pay that off, and it's very profitable. You have another product that says, no, don't do that. Use debit, and then occasionally credit, fixed installments, 0% interest. The point is that again, I'm fighting fire with fire here. Any product, any bank issuing credit like Klarna is going to unfortunately see some customers not being able to pay. That's true for the business, of course. But in general, we are attracting a different consumer. They're tired of the credit card industry. They're called the aware avoiders. They've tried credit cards. They found themselves with too much debt, and now they want a healthier product. And this is a healthier product, which is also why our losses are lower. And I think the thing that Trump is suggesting is just going to, again, put more focus on this, that these products are not good. They are driving bad behaviors that then often put people in difficult situations.